Good morning, folks. How are you? Paul says he's angry. They have management groups for that stuff, Paul. All right, so we're looking at the economic calendar here. And you can see we have very little to do with much of anything except for the CAD at 8:30. So we're going to be looking at that this morning. Okay, so we'll be looking at the impact that the building permits are going to have. It's a medium impact news event, so 8:30. We'll see something most likely coming in as a flurry. Then we have 10 o'clock in the morning, we have a medium impact U.S. dollar and two minor little things at 10 a.m. And later on this afternoon, we have an FOMC member speaking. So not too much by way of excitement this morning. Let's go over to our charts. Okay. And we have the U.S. CAD set up here. We had a little bit of movement off of the opening price here and moving lower. I think we're going to probably make a run for the buy stops above this short-term high. Okay, so we have that. And okay, we have a nice central bank dealers range in here and Asian range. Okay, so at the opening, we dropped down. Look how much time they worked below the Asian range and the central bank dealers range. So we have essentially one standard deviation. Use the thickest portion is there. Maybe even two, almost two. Just about two. We'll work with it as one standard deviation. And Asian range as well, nice and tight. So we're going to be watching for the market to want to come back down into this order block here. Right there. So if we hit that, that should send us for the buy stops up here. Not a whole lot in terms of pips, but something. So let's do this. Let's determine what that price is. The high is 36.90. So we would have to see it trade down essentially almost to 36.90, getting 36.95 entry. So 95, almost 40 pips potential for today. I like the fact that we tried going lower, tried one more time. Then we broke market structure with this short-term high. London high still intact. You know, there's buy stops above that as well. Small little itty-bitty tiny fair value gap right in here. So even if that's all we get, that will be enough to get first profit in here. So we left the up close candle and only sell side delivery has been offered in here to here. So we're going to frame that. Okay, so we'll be looking to take, if we get an entry, if we get a long in on $CAD, first profit's going to be at 137.15. $37.20, nice institutional level. So I'll be taking first profit at $37.15 and then a limit at $137.35. Small little fair value gap right up in here as well. So let's note that. So we have that as well. And let's delineate that price. So we have $37.50 right in there. And if we take out, okay, if we go lower, say we go lower and we blow out these lows in here. Excuse me. What I'm looking for is at 8:30, I want to see price hit this level, and then we'll look for that move up. Now, if we're holding in here ahead of the news around 8:28, 8:27, I'll wait as price drops down. As soon as it hits this level here, I'll go with a long, and the stop will have to be 10, 25. Let's see. We'll go 5 pips below these lows in here, so let's determine what that's going to be already. So 136.71, we'll just use 136.65 as a stop. Let's put that in there also. So that'll be a stop. One of the other things I like about this setup is because if you look over at the euro, we have a little bit of downside sell stops here that would send euro dollar lower, should beef up dollar index going higher. So sell stops below the low on 27th of April and below the May 4th low, or really just in close proximity to that. So it could very easily stab down here and go another 10, 20, 30 pips. And then that'll obviously give us some lift, or at least ease up the resistance ideas that may be in the $CAD. So we're looking for this to trade this morning. So again, if we hit this level here, at or just above the, just before rather, 8:30's news release, we'll go long here on a demo using 136.65 as our protective stop. First profit will be 137.15 I'm going to use, and then I'll take another portion off here. I'm going in with 3 minis, so you know, and then I'll take a second mini off here, and I'll leave the last one on with a break-even stop, looking for 137.50 as a daily objective, closing in the fair value gap. So that's the outline for today. Looking at the dollar index, we are seeing it try to trade up into that 99.65 level we outlined yesterday, closing in the gap. If we get some run through on that, again, the weekly objective on the upside is the 100.85 to 101 big figure. Let's see what that low is. 101.95 closes the 94 rather closes that fair value gap up here. So we might get 101 on the upside if we get continuation for dollar, but we'll see. Aussie, we have this outlined based on the fair value gaps relative to the daily. You can see that here. So far we've seen some movement lower. We'll look for continuation going into the rest of the week. We may get one up close candle. I prefer not to have any up closes now. Just let it run down and get that, and then it can do whatever it wants to do. I shared that on the case studies last night. So using what you learned last month, opening price, it had very little movement up here, almost 10 pips above it. But at the open, real nice movement away from that. All right, so cable, we already mentioned yesterday that the mean threshold here shouldn't offer much support. Looks like we're going to have some movement lower. There's a big draw on liquidity down in here. And this low here already respected this high. So if we do break down, this sell stop area here should drive price lower, not just come down for the stops and rally again. So we'll probably see a little bit more movement on the upside on the dollar, which will pressure cable lower, maybe come in and close its void, at least look down into the midway point of that. That may be objective. And euro, again, we said we have our eyes on those sell stops down there. So we'll be looking for those levels this morning. It may not get down to that 108.53 level today, but I do believe we're going to probably run at least 5 to 10 pips below this low over here for a run on sell stop. So let's put that in here. Keeping it very close to the vest. We're not looking for big grand slam home runs. Yeah, I like 108.70. That's good. We'll work with that. And let's go back to dollar CAD. Dollar CAD might be running already. We'll see. Wait for the news. If we spike up and start running through for the buy stops, can't chase it. You gotta leave it alone. Now, a scenario that may be happening, and I have to be flexible for this, just like you as well. We may be running ahead of the news to take the buy stops here and never even get to the fair value gap. And if we reject after taking the buy stops and break down, I'll look and see if there's an indication that we may be running for the sell stops below here. So I might be wrong. We might be just running and making the high of the week with dollar. You have to be mindful of that because this could easily spike up and hit that and keep dollar CAD from ever really getting much higher than just this old high here. So you have to be mindful. I already hit 37.14. Oh, you want to buy it, do you? Well, let's take off now. Euro pound, we'll look for that to close the gap also this week down in here. And again, we don't know if it's going to have continuation going lower than this low here, or if it's going to come down just to take the sell stops, fill a void, and make a run for the fair value gap up here. A lot of scenarios that could happen right now, which makes it iffy. When it's real clean and logical for it to go one direction, that's the best time to be trading. So we've already worked two times above the opening price, both at the New York Open Okay, so we're above the opening price once. Twice we came down, worked below it. So the expectation is we're going to see a further upside on dollar CAD and in continuation of what we've been seeing on the daily chart as well. So we have institutional order flow going in our favor. Yeah, this one's already left the airway, the runway rather, without me. If you are short on euro, you want to take something below that 108.75. Definitely have something come off there. Euro was very similar to what we outlined in the Aussie dollar. The bias is lower, looking for a higher dollar. So one could use the opening at 0 GMT or just above it to sell it. And I didn't see it exactly, but well, here it is. Yeah, the opening price is here. So we had a little bit of movement, but it just rolled right over. So we had consolidation in here. You could have, excuse me, you could have sold this without even needing to be up in London, which is the heart of what was taught in April. Yeah, we're down inside this order block. We went below the mean threshold, so I think we'll probably see it spike down in here at 108.70 level. Really nice to see it go down and hit that 108.55 level today. That'd be awesome, but I may be expecting too much for this one. Oh man, both objectives on that fair value gap's already been filled. 37.20. Well, at least it's nice to see we're seeing the right side of the market again. You got to take your positives out of what you can. All right, so looking at a dollar CAD, there's nothing up here except for the buy stops now. So even if they want to take the rejection block here, logically, if they're going to come for that up close, the buy stops is most apt to be tagged. Now we do have a rebalanced price level here. This wick delivery on the downside, then get and traded up. Then we had to open here. We traded down, so we passed 2 times in this range. So if we get above the buy stops in here, expect that to be having a resistance, really short term, hit it and then reject a little bit and come back down. If it does that, it needs to stay above this last up close candle right there. Let me put that on the chart so you can see it. So again, if price comes up, hits the buy stops, and has a sharp reaction off of that, it needs to stay above the last up close on this candle here, right before this down move. That'll be mitigation. That's why we'd expect to see support there. So anyone that was short here to use the price drive lower, this would be their opportunity to mitigate those shorts and then recapitalize longs, and then maybe make a run for that 137.50 fair value gap. In a couple more minutes, we should have the news come out. Really would like to see some big movement in dollar index. Yeah, Daniel says he thinks he sees some symmetry returning back to the marketplace. I am hopeful that we do get it because that's what keeps me sidelined in live trading. Don't even in scalping, it makes it highly suspect. So you got to keep your risk really small. So we have less than 15 pips to get to that 99.65, closing in that gap. It'll be interesting to see if they get overzealous and not just close the gap, but just really send it higher. In that case, if we do see it go above what we reasonably expected as a gap closure, and that would be the low it's on this candle here. Okay, so if we see 99.65 traded to, and traded through it, going through it and you're higher, if we get through the close at 99.75, all eyes go right to this fair value gap up here with the last down close candle right here with its low, 100.94, and this candle's high on the 12th of April, coming in at 100.83. So that would be the fair value gap up here. Look at the reaction off the fair value gap on dollar CAD. Isn't that neat? I think it's always very funny to see the stop run on your dollar just happened. Other screens just went crazy. Watch this likely expand down through here. Remember, you have to take something below that 108.75 level if you're short. I got a lot of people in here saying they're short. Excuse me. Yeah, folks still jabber about what we do is supply and demand. Man, this is not supply and demand. If I would have had this box up here, okay, it doesn't even match what would be taught over at Online Trade Academy. They have no idea what we're doing here. In fact, I watched a video the other day because someone suggested I was using his stuff, and he says that there's no gap in the video where we actually call a fair value gap. So I would love to be able to talk about that with the free community, because that right there in its own words, Sam's own words, he says there's no gap here, but it is. All right, let's just go back over here and take a look at this real quick. All right, 2 more minutes. 2 more minutes and we will see whatever we're going to see in terms of volatility as a result of the CAD news. Sam Seiden, that's who I'm referring to. Gerard. Folks always imply that I got something from them. In fact, I got nothing from them. I facetiously make fun of them a lot because they get real close to it, but they don't get it. You don't learn it from tickets on a desk, that's for sure. All right, so is the tell you what, George is really pretty down there. And what I noticed, I didn't have any allergies at all. I didn't have to take any Benadryl, not one time. And I'm back up here in Maryland, and it's killing me already. Okay, so we have our news out for dollar CAD. Still working inside that fair value gap. Yeah, it doesn't look like it's going to come down for us to get a discount entry. Yeah, I'm allergic to grass. Grass what sets me off. And for whatever reason, it wasn't giving me a problem down there. But man, alive up here, it was terrible. Matter of fact, as soon as we got into Virginia, I started feeling it. pollen. Yeah, grass pollen or whatever you want to call it. I'm allergic to grass. If I sit down in grass, I'm going to break out in hives. All my business. Really, really pretty down there. Folks were really, I was surprised how pleasant they were. Yeah, here we go for the buy stops. Well, unfortunately, we didn't get our discount entry, but we're seeing the market look, to respond like we're expecting now, so that's a good thing. Let's check out Euro, see if it's making a run for its stops yet. It should expand down in here and get below that 108.75. It should be doing it here. I got home and my son was gloating. Dad, I got a really good buy off of dollar yen. Did you see it? I said, yeah, I saw it on the forum. Don't rub it in, kid. It's beginner's luck, man. He said, still going. I said, are you still in it? He goes, no, I took profit. I said, well, then you can't talk about it now. But still, Dad. Don't want to kill his spirit, but it's neat seeing him get excited about it. All right, so we have buy stops in jeopardy here at 37.35. Nothing up here except for buy stop, buy liquidity up here. And then fair value gap outlined as we did earlier. We're through the mean threshold of this last up candle here, which wouldn't be necessary because of the structures in place here. So we're definitely looking for a 37.35 run on buy stops. And what we do at that moment will be interesting because I want to see if it trades through that with any measure of conviction. Because if it does, then we're looking for 37.50 to, well, let's just call it 37.50. Because I would essentially fill in that gap in here, even if it was a midway point. Eric's asking where's the entry on this. We were looking for it to come down to the order block here. And as soon as the price would hit that, that would be entry. We did not get a discount entry at all. It just stayed up and then just expanded going into the release of the news. Right on the direction, right on the first two levels, but we did not get an entry. We didn't get a discount entry yet. And at this point, I wouldn't do it now. The blue line's mitigation. We were saying that if it rejected right away at this level here and comes down, we could reasonably expect to see it try to go one more time, go higher, and then go for this gap. And that's still potential here, but we just can't buy it right now. The condition would be have to watch for buy stops to hit, reject, come down, mitigate. What are they mitigating? The sells that they use to drive price down below the Asian range and central bank dealers range, one standard deviation, or two if you use the wicks. The accumulation that took place in here, below the opening price at both 0 GMT and at New York midnight, the price was below that. They accumulated. Ahead of the news, they expanded. We were waiting for price to come back down, hit the order block. It didn't do that. So the condition now is if it trades at buy stops, rejects, and trades lower, hits this, the sell orders they used to drive price lower when this last up candle formed, we use the close of that candle. That's mitigation. If it hits that, they will mitigate their short positions they use to drive price lower, and then it'll be a free reign to go higher and maybe hit that 37.50. Why mitigate those? Well, they use the orders to drive price lower here. And they don't have to do that. I'm just saying that if we want to get long, that's one scenario that we can use. It has to be only this one now because the likelihood of getting back down on this order block is not likely. So we're going to look for this mitigation because the storyline is they took price from this high down here to knock out sell stops below these lows. So they've already accumulated down here. They expanded, so they're away. Anyone short down here, they're not going to let them off the hook. So we can't expect them to come back down now. It's already too much gone. So where they sold to drive price lower, those orders are underwater now. Right now they're underwater. So if they come back down after the buy stops are taken, because this is a balanced price range, 2 times it's passed in here, buy and sell. If it rejects there, that's just normal retracement. And there's nothing wrong with that. It can come down, hit that, and then we would look for price to expand on the upside and go to the fair value at 137.50. But that's the basis of why I see or expect it to be the case at a buy stop rejection and trade lower. Not that we're going to create a high and trade all the way down through the lows of the day. We're just looking for it to come back down, mitigate the shorts they use to drive price lower in London, and then see it expand higher. If we use a fib, run a swing projection on it and see what we got, we should be real close to that fair value gap up there, 37.50. Yeah, symmetrical price swing just falls just short of that. So that's interesting. Breakers are mitigation, but the premise is mitigation. That's what's going on, whether it's a breaker or a regular standard mitigation block. The process that's happening on institutional order flow is they're mitigating. So to answer your question, Tanner, yes, this is a breaker, but the concept and idea behind it is they're mitigating what they use to go lower. Well, if they trades back down here after taking the buy stops. I like it after it takes the buy stops. I don't like it when it comes down here. Like if it just made that high and comes down, I don't like that so much. I'd rather see it take the buy stops, because then we have a market structure break with this short-term high. Then it can come back one more time and make a run for the fair value. Anton's asking, when did this webinar start? We've been at it all night long through London. We got about 175 pips banked, so try your stop losses, everybody. Now, we started at 8 o'clock, 5 minutes after 8. Is it possible to be profitable without trading the U.S., without using U.S. dollar? Yeah, you can, but why would you not want to at least have that? It gives you greater insight. Eurodollar tickling the 108.80 level. Again, sell stop liquidity resting just below that 108.75 level. All those orders are hot right now. Actually 108.75. I'm looking for 108.70 to print. That's a good question, Andreas. Why would I not anticipate this being a turtle soup? If we come up here and take the buy stops and then reject, why would this not continuously go lower? It can always do that. The reason why I don't see that happening is the structure that we have in place already from Friday's low. Monday, we already traded below Friday's low. We came up, made a high. Longer term, dollar CAD should go higher because the futures contract on Canadian is extremely weak. So that's bullish for this pair, dollar CAD. And we've seen them engineer the intraday liquidity down here. They worked this a lot. A lot of folks in here were using all kinds of ideas to get short, and they're trapped. So this is where all the work was done on the daily range. So if they're going to go up above the buy stops, okay, and then come back down, those individuals that are just holding out for a wing and a prayer, to get off that losing position, they're not going to let them off. So anything above the buy stops here and then coming back down, I would see a continuation on the upside at this mitigation area right there. Cable looks like we're going below the short-term low here on May 4th. So that low comes in at 128.30. So we're probably going to see 128.20 to 128 big figure downside. And then we have this order block here, which already has been used. So your concern is going to be, why won't we bounce there? It won't. Most likely won't bounce. That will probably just come down through that. We do have sell stops built up below the low on April 24th. That comes in at 127.72. So 127.70, 127.65. Sell side liquidity resides there. If it goes down below that, we'll see probably most likely expansion down to at least the middle of the blue shaded area. That's your fair value area or liquidity void. We could potentially see 26.85. So there's your levels you can scale out if you're short. Yeah, hi Paul. COT, Paul saying COT for CAD is equals ONG. I'm going to take a wild stab and say long. Is that what you were trying to say there? Just didn't put the L in. Remember, COT is a longer term, and it's not going to be right to the pip or spot on with timing. Almost there with our objective on closing the gap from a couple weeks ago. And again, what we're really watching for is there's an interest to see it to go not just to the gap closure and then come off, but to expand through. I think and personally believe they're going to try to make a case to go through the gap, not just hit it and close it. There's going to be people that's going to try to play that gap closure and get short dollar. And they may get an initial cookie, feel like they did the right thing, and then they're probably going to jam it up against them. If we get this through the gap opening price movement I'm expecting, again, the weekly objective is to see price trade towards this fair value gap up here on the 12th of April. So we're looking for 100.80 to 100.85 in that vicinity. We are in scalping mode, Cliff. Nothing in the markets has me terribly excited to be participating any longer term than that. If I was, I'd be trading with live funds going crazy. Aussie dollar is continuing its expansion down into our opposing fair value gap or discount array. I want to see it break down below this low. Don't want to keep that wick intact. And dollar CAD still above our fair value gap. So that bodes well for a run on liquidity above the high of yesterday, May 5th. I'm sorry, May 8th rather. Good grief. I'm going to include the futures portion, like commodity charts, with each one of these markets today. The euro, the cable or British pound, the Aussie dollar, and the Canadian dollar. So I'll give you some insights with COT, and I'll give you why I said that Canadian dollar futures are weak, and they potentially have a little bit more downside. So that would give us upside for dollar CAD. It also answers in continuation with Andrea's question why this would not be a turtle soup. After running the buy stops, why would you not expect it to trade lower? We can expect it to trade lower, but it would be limited in our understanding to the mitigation block here. And then we could look for capitalization again to send it higher. It doesn't have to do that, but if it were to reject here, I mean, it could just keep on going through and go right up here and close the gap up at 137.50. But if it does that and rejects, keeping in mind that the higher time frame perspective on Canadian dollar futures contracts as the commodity, that's bearish. So if that's bearish for this pair, dollar CAD, it's bullish for this US CAD, because if the Canadian dollar is dropping, dollar strength is going to be seen. So that would push this pair higher. So that would go against the idea of expecting this buy stop run as a turtle soup sell. it could come off that high and trade down here. And if you wanted to profit on that, that's something you can certainly do, and that could be a scalp. Yes, there's nothing wrong with that if you're viewing it like that. But don't view it as a turtle soup and expect it to go lower, because I don't see that right now. It can happen because I said it now, it's in recording, but I don't see that happening. I think that we've seen the turtle soup in the event of all the lows here and this short-term low over here. We saw that as a turtle soup long. That was the premise of why I expected the expansion on the upside. There we go. 108.75 has been tagged on euro. Let's see what the low is. Yeah, 108.75. Yeah, euro looks like it wants, I'm sorry, pound looks like it wants to come down a little bit. So we might see some continuation on that this week. Dollar CAD should bunch the buy stops now. I'm a little disenchanted because I was hoping we would get an entry in here at that order block, but that's exactly what's going to happen in real life when you're done with the mentorship. You're going to have an idea, you're going to see where it wants to go, and what you want to buy at may be too cheap, and you don't get it. So it is what it is. The hedging program for the COT stuff, you can't find it anywhere except for when you create it, like I will teach. Should expand in here, run those buy stops, and that should give you folks that are short euro an opportunity to get a little bit better exit. I'm getting ready to expand one more time down in here. Should see a large range come in here, reach for liquidity. I see your question, Richard, or Ricardo rather. A lot of the questions are being asked that have nothing to do with the two things we're watching right now. It's very distracting. But I know you've asked about the forum and the voting, so I will comment on that before we close. I always give you some kind of housekeeping thing either before or the end of the live session. And you guys are busy. You must have missed me. This question boxes are flying by. Cable is pound dollar. This is the name they gave it. Fiber is euro dollar. And I don't know why they gave those names. Never looked into why they got them. The Aussie dollar still hasn't come down below its intraday low. We want to see that happen. Really, really nice to see institutional order flow having an impact on price and seeing where they want to draw it. I've had a vacuum of that in recent weeks, so it's nice to see it coming back. Just a few more pips, we should see that buy stop run. The question is why didn't we just buy at market? I'm assuming you're referring to the dollar CAD. Yes. The reason why we didn't buy at the market is because we had already had a expansion in here. So if we're going to buy, we want to see it actually come down. We want to enter during movement that's opposing the market direction we're going to see in profit. So if we're buying, ideally we want to be entering at some measure of downside movement. Okay, and that's why we outlined the order block here. So yes, in hindsight, one could look at it and say, well, we should have bought it at the market, but that doesn't fit the criteria that we teach because you're really buying it at a premium. If you can get it at a better price, lower, then that's what you try to go for because it keeps your point of entry and where your stop needs to be smaller. Buying it up here and using a stop loss that we outline here keeps a greater range of risk in terms of pips. So again, the reason what we're looking for is movement down when we look to buy, which is what the strength of the order blocks give us. We have a down move, so we want to see it return back down to that. So now we have a fair value gap. See that? It's left that intact. We didn't come down, so there's a small little fair value gap right in here. May not constitute very much this week, but be aware of it because it's there now. There's a number of you commenting right now saying you see where it wants to go and you're too afraid or impatient to wait for it to come back down to a better price, and you end up buying it and you end up getting scared because it goes down against you. And even though that would have been a better place to enter, you're exiting in fear right when the real buy signal occurs. Then price takes off and runs. Yes, that's what I'm trying to avoid you from feeling, because you know invariably you're going to buy it and have too much leverage on there. And any little movement against it's going to be multiplied by 1,000. And it'll scare you right out of the move. Yeah, Euro pound's being held in consolidation. Almost got to that gap. Look at that. Highs coming in at 99.59, just 6 pips shy of our expected gap closure. Again, we're looking for the tendency for it to get overzealous and really expand through, because then we know we have a directional bias going for the rest of the week for that fair value gap ahead. What percent risk do I recommend on per trade? Is that what you're asking, Eric? Right now in these conditions, or in general? Right now or in general? With these conditions, about 0.5%. It just doesn't make sense to do anything more than that, because if you have a series, if you're risking 2%, you know, even if you do my scale down, you know, it doesn't take long to still take a full kick to the gut, about 5 to 6% over a string of losses, and the potential of you making it back isn't there because the conditions aren't ripe. That's the reason why I go a little bit bigger risk when the markets are more symmetrical, because even if I'm wrong, that loss or series of losses gives me greater insight, and then I can flip my ideas and get more closer to in sync to what the market would suggest going higher or lower, and then trade accordingly. So that's why I don't fear taking loss. I ain't worry about drawdown, because if the market conditions are there, the loss is a premium for insight. When it's like this, in these current conditions, I don't know if I'm going to be right like any other time. But when I'm wrong, it doesn't give me any new information. Like, you're wrong. Thanks for your money. Thanks for playing, and I'll see you tomorrow. Come back with a greater leverage, and we'll do an even better job of taking money from you. I'll cover some more discussions on money management and risk using the scalps and stuff. That's all part of it. It got real close to the buy stops. Hasn't ran it yet. So far, we've only seen it trade above the rejection block at 37.30. So we just went above that. 1 pip. And Euro only went down below our level 108.75 or 76 noted here just by 1 pip. So if I were short in Eurodollar, I would want to take something off here. If you are looking for a trailing stop loss in here, it would have to be above the 50% of this daily range and not try to get tagged too prematurely in case we get more continuation down. So 50% of this range is equilibrium in here, so your stop loss would have to be we have a fair value gap rate in here, so I would think that 109.15, that's where your stop should be if you're short on Eurodollar. Take something off in here in the event we'd get some kind of rejection. That's all it's necessary for some days where it went just below or to an old low, and it can punish you for another day and a half and then send it lower, i.e. Aussie dollar. That's what got me a couple times this year. Just trying to short the Aussie right on my direction and my levels, but they came back and swept me before going lower. Is the euro in a market maker sell program? 15-minute. Well, that's where we're at now. Yeah, that's what we're seeing. That's what we're asking for in terms of the market to give us a better run on the liquidity down below here. Consolidation, rally, return to consolidation, accumulate, reaccumulation, smart money reversal, low risk sell, distribution, redistribution, and now we should come down a little bit more convincing in my opinion below there, but it doesn't have to. I would demand it as the trader, demand to go a little bit lower, but from a profile standpoint, it's already did what would be necessary. That's why I'm telling you to take profits, even though we have an up close. It's already moved away from level. That's why I'm suggesting if you're short, take something off here. Keep your stop off. Stop loss at 109.15. All right. Well, that's going to do it for today. I know it wasn't an entry, but we were able to see some price action that was favorable. I think if we continue this trend and start seeing a little bit more predictive price action, things will get a little bit more interesting as we meet on a real-time basis. But we saw fair value gap filled. Watch this the rest of the day. We will be looking for the buy stop still to be ringing out. If we happen to trade back down into that blue level that's highlighted here, again, yes, that is a breaker, but we're looking for the concept of mitigation there. So conceptually, we don't want to see price trade below that. So if we trade down there, you can do a test or a case study there, do an entry right as it hits that level. You can be a little bit more aggressive and trade it, obviously on the opening on this candle here, but for mitigation, we like to use the up candles for bullish breakers. So wherever it closes, that's the, on the up candle, that's the level we're looking for it to be retraded to. That level comes in on Forex Ltd's platform. It comes in at, let's just use the candle, Michael, why are you making it hard for yourself? 137.06, so 137.11, that'd be your entry. If we get some movement lower, you can test that, and your stop would have to go below the fair value gap in here, mean threshold of this down close candle. And I'll give you a price for that. The open is 36.86, low, close rather 81. So you can use 36.80 as your stop. So buying at mitigation, stop at 36.80, and you would look for 37.50 as your objective. That would be your weekly objective. Doesn't look like it's going to happen because we're probably going to take the buy stops now. Getting ready to expand up there and grab them. And just another pip or two. Now what we're seeing here, all this is the same thing you'd be looking for on a daily chart. All of it's universal, it's all applicable on all time frames. It could be done the same way on the monthly chart. We're just seeing price action delivered on a smaller interval because of the intraday measurement of the 15-minute time. 4 hour the same way, weekly the same way. Everything we're seeing here is applicable on higher time frames. And I used a higher time frame to frame the idea that it was going to go where we're talking about today. And I were honest with you, I think that the time I had away from the markets and being with my family this week helped, because it forced me to have a different perspective when I came back. So it's always a good idea to do that. All right, so that's it, folks. Wait for another pass for that 37, 35 level. They're probably going to take it one more time, juice it through there. And we will, again, have a recap today. I will get this video processed and sent that on to the forum. Should have it by 11 o'clock, I think. I think it's fair. And then we'll do a recap later on this afternoon. I'll have COT information included on that. And I'll give you the links for tomorrow's session. And again, we'll look at 0 GMT conditions for tonight. If there's anything that we can work with, I'll give you that as case study. If you have not already noticed on the forum and on Twitter, I posted a poll in the form of 3 posts that you can like. That like constitutes your vote. Okay. I'm giving you as the community the opportunity to determine how we complete the remaining portion of our time together. And if we want to continue with the irregular schedule and just have the month of September for questions and answers, I'm certainly willing to do that. Then I gave an alternative to that would be having June, July, and August, no fee, but we just spend extra time working with that. But we still run the risk of the market not being in a favorable market condition, so we could still be doing very similar to what we're doing now. And while that's extra time together, and it doesn't cost you anything, I can't promise that the market's going to give you us, conditions that we can do a whole lot more. And I read a tweet by 2 people in our group that suggested, why don't I just add that extra time at the end and keep the normal schedule? And quite honestly, ASR run on stops. Very nice. Very nice. That's what we're looking for. Unfortunately, we didn't get the discount entry, but we're seeing it happen in terms of direction and all that business. Let's see if the euro got a little squeeze on it. Not yet. Dollar index still didn't get it. So it's nice to see that run out. So I got lucky today. I had to put that in my journal. Lucky, no entry though. But the third option I used was suggested by a couple of our members on Twitter. And Twitter goes bye-bye today, by the way. So I'll also include that in the session as well. They gave me a download link for archive that I can have that. So all my tweets will be in that. So I can post that to the forum. I don't want to be on social media at all. Not in the form of Twitter. I don't want people tweeting to me. I don't want people asking me questions on Twitter. Everything needs to go through the forum from now on, or email. So if you want it private, just email me. If you want it to be available to the community and maybe they can learn something from it, then obviously post it to the forum. I'm forcing Cody to scan the forum also on a day-by-day basis starting today. Any real hot topics or demands like, hey, look, I need this, can you really address this? He'll go through that and filter that. So there's really no necessity for me to have a tweet sent to me. I'm going to be going through the forum again on a day-by-day basis as well in the evening time once I get done with family dinner and all that business. But the third option is we go through the schedule normally. The last 3 months are delivered as originally outlined, and then I spend not only September as an extra month with no cost to you, but October and November. So it's the same amount of time my wife has allotted for me. And I told her last night that was a suggestion. And I don't even know why I didn't think of that myself personally. That was stupid, but I had a lot of things on my mind this weekend nonetheless. But I think that's a viable option as well. So I'm not going to talk into any one of them. You as a community can vote on that. On the thread that I created in the news section, there's actually a poll. Okay, while I did ask you all to do the like, I didn't know how to use the poll feature on our forum until last night. So I looked up how to do that. So make your vote on the poll, and we'll use those results. Just use the descriptions in the 3 posts I gave you to give you a better breakdown of what information and how it would be delivered. And that's that. So Yeah, we won't be doing anything in December, that's for certain. I can't. We have 2 trips in December we have to go as a family, and I'm not going to be doing anything in December. So December and January, I will be absolutely not even looking at charts. All right, so any updates will be on the daily basis through the forum. I'll be a lot more active in there, and every month you see there's a secondary thread created. So not only is it just the content in one portion of each month's thread or area, there's actually another subtext or subtitle topic in each month, and I use that as like a sounding board. So anytime I create that, you want to subscribe to that, and we'll also have a schedule. We're pretty much on a schedule now. I mean, I tell you when the live sessions are coming, they're pretty much uniform time, and by 3 o'clock in the afternoon, New York time, all of your charts are updated on the chart index, and your daily recaps are posted. So the recordings go up as soon as I can get them done. Like this one here will be up as soon as I possibly get it done and uploaded. So that's the schedule. And at 8 o'clock, you know I'm looking at the open on the prices, and you want to be checking the thread and around between 8 o'clock and 8:30 every evening, New York time, to see if there's anything that we're going to be watching for that session. So in New York, I'm sorry, in London rather, New York midnight, 12:30, I'm usually getting up, checking if there's anything going on in London. I'll send you a video that will post before 1:15 a.m. So that, I mean, we're pretty much, we got a schedule. So it's not like you have to be Johnny on the spot. Just know when to go to the forum and check out that information. If there's nothing there, then you'll know there won't be anything there. I'll tell you, no signal, no setup. Okay. Pan, I saw your email. If I'm not mistaken, you were asking the same thing. I was going to get to those email questions because they're really outside of the scope of this discussion. But I'll get back to you through email about that, okay? I don't want any kind of social media, Sean, because anything I say is just going to be copied, taken out of context, or shared. So not that it can't be done in the forum, but it's just one less thing for me to worry about. I just want to make it a lot more easier for me, because I have to do this myself. You know, I don't have 15 people helping me. Cody only helps me with the payments. He can't teach anything. He can't, do any lessons for me. He can't make the PDF files. He can't do any of that stuff. So he's only limited to helping me do the administrative side for processing payments or restoring access. That's it. So I'm still a one-show pony. All right, so that's it, folks. I'm going to close this one. Really nice to see CAD respond like we were hoping to see it. Unfortunately, we didn't get an entry. If you entered, don't tell me, because it'll just make me mad. But we'll be back at it again this evening. I'll look at the Zero GMT hour and see if we have anything we can watch. Until this afternoon, folks, I wish you good luck, good trading, have a pleasant day, and I'll talk to you later on.